Hey everybody, Courtney Smith here with our April 24th edition of Wall Street Winners. Let's dive right in, and of course this is the high point of the whole thing. Okay, big change in my attitude. What I've been saying is we've been talking about how we were going to have another leg down. That leg started. It happened on Thursday. It's on Friday. That's it. The bear market is accelerating now. I've been telling you it's been a bear market now since the beginning of the year. It's now accelerating to the downside. Here we can see the S&P 500 Thursday, giant key reversal down, follow through on Friday, purple predictor, extremely bearish. Let's take a look at the Dow Jones. Here in the upper right-hand corner, we can see that selling pressure finally broke out after having really not been in power. So this shows that the bears have taken control of the market for the first time really since back here in the middle of March. The NASDAQ, you can see that the purple predictor is accelerating to the downside. The NASDAQ is and will remain the weakest of the three indices. Seasonality, obviously, forget it. We're neutral now on the stock market from that perspective. The utilities are still bullish, although they gave up a little bit of strength on Thursday and Friday as well, not anywhere near as much as the industrials. Now, this is the killer, and this is why we said there's going to be another, the new leg down. In addition, notice that just follow the red line. That's probably the best scenario. This dive down is a much bigger one than the one we had at the beginning of the year. So I think we're going to see a significant decline right now. Yes, I think we're going to follow the seasonality and get a little bit of a rally here and then have another big move down. This is a bear market, and it doesn't mean we won't have, bullish moves. That's obvious. We always have bullish moves, even in bear markets. The last bear market was in 2020, and it only took a few months because it was kind of a fake bear market in a way. But go back to 2008, that one lasted a year. This one's going to last a year as well. Something like that. We don't know exactly yet, but it's going to be a long-term bear market. And then we're going to go into a recession next year. Maybe even late this year, but let's just call it late next year, or early next year, sorry. But right now, the key is we've now turned the corner, which I told you about last week and the week before, and now we're into this new bear leg, which should be bigger than the bear leg we've already had. Now, over here we see asset allocation. Asset allocation had been one of the most bullish features supporting the stock market. That has been kicked out. Money went out of the stock market and into the safety of bonds. Risk, however, is doing exactly what I've been telling you it's been doing all along. People are going into the safest sectors of the market. They're not going into the risky NASDAQ. They're going into the safe utilities and things like that. Global shares, bye-bye. Yield curve, we've talked about this a lot the last couple of weeks, so it's exactly the same as it was last week. Bonds, big bear market. Look at the collapse in the purple predictor showing that the smart money has given up on the bonds. Has given up on the bonds, and they're going to accelerate to the downside. Now, I'm going to take it another step further. Not only are they going to accelerate to the downside, but junk bonds are going to lead the way. Junk bonds are going to be savaged and compared to investment grades. The same thing is happening in the bond market that we see in the stock market. I actually have a RISKDICATOR for the bond market as well. Maybe I'll start adding it because bonds are going to be savaged here. So the bonds are going down. The chart here is for treasuries, which are the safest. But if I showed you a chart of, they like to call them high yield, but you and I, we call them junk bonds. It's way worse of a bear market, and it's going to continue to be way worse. Here we can see all of our indicators are telling us we're going to see higher yields in bonds, lower prices. Dollar accelerating. If bonds are going down, then that means that yields are going up. That means that the US dollar is more attractive because yields are not going up as much in other countries, particularly in places like the yen. Euro is trying to keep up, but even there, we're going to see the dollar continue to remain strong. If the dollar's strong, gold's going to have a hard time. It's going to have a hard time rallying. So just really want to stand aside there. Our gold key indicators are slightly bearish. I mean, this indicator is very bearish. The top one, which is the euro, is slightly bearish. And this middle one is slightly bullish. But the big one is the yen, which is this green line here. Crude oil, right now, we may be forming a descending triangle, which is not usually a topping formation. So I'm a little bit dubious. I think that volume has gone down. So I keep getting bullish, then bearish, then bullish and bearish. How about I just say I'm on the sidelines and we'll just see what the market does. Bitcoin is going to continue to go lower due to the decline in the NASDAQ. Apparently, Bitcoin traders don't know how to trade the Bitcoin, so they're just trading the NASDAQ now. So it's going to follow the stock market down. People are going to liquidate Bitcoin in order to cover their margin calls that are coming in the stock market. Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody. We'll see you later.